Asset Reconstruction Companies. The Indian banking system is reeling under a glut of non-performing assets (NPA). The unpaid debts of Indian corporations and households have risen to alarming levels. High-level bureaucratic meetings are being held to get rid of this menace. Non-performing assets could appear on the balance sheet of banks. This could cause a ripple effect as fears that one bank is unstable makes the entire banking industry unstable. Hence, it is absolutely imperative that these bad debts be taken off the books immediately. Asset reconstruction firms help banks to get this non-performing asset off their books. What do asset reconstruction companies do? Asset reconstruction companies are in the business of buying bad loans from banks. For instance, if a bank lends money to a person or company, they expect to receive periodic payments of principal and interest. However, when they do not receive those periodic payments for an extended period of time, let's say 90 days, these loans are classified as non-performing assets. If these NPA are allowed to stay on the bank's balance sheet, they erode investor confidence on the bank. Hence, banks sell these bad loans to specialists called asset reconstruction companies. The business of these companies is to buy bad loans from banks at a steep discount. These companies then take special measures to recover the money owed. If they are able to recover the money, they make a profit. If not, they lose the money. Regulation and legality. For legal purposes, these entities are considered to be banking entities. Therefore, the laws that apply to banking companies also apply to asset reconstruction companies. Also, they are subject to the same regulation as banks are. Therefore, they are also governed by the same regulators as banks are, banking ombudsman. In the absence of proper law enforcement in India, there is a demand for separate legislation governing the functioning of ARC. This is because ARC are known to use strong arm tactic to recover debt from delinquent creditors. How reconstruction companies acquire assets? Asset reconstruction companies acquire assets in a couple of ways. Each and every aspect of their operating, including asset acquisition, is closely monitored by the banking regulator. Raising funds. ARC are allowed to raise funds from qualified institutional buyers, QIB, in order to raise cash to make an upfront payment required to buy discounted debts. ARC could issue debt instrument or even sell equity to raise this cash. However, it is the responsibility of the ARC to ensure that retail investors are not investing their money in this instrument. ARC are high-risk business and therefore only restricted to QIB that have the capacity to take such a loss. Partnership model. Many times ARC do not directly buy debt from the banks. In such cases, the debt remains on the bank's books. However, the bank hires the ARC to perform debt recovery services. Revenues that are generated in this manner are split between the bank and the ARC according to a predetermined percentage. Complex accounting requirements. ARC have complex accounting requirements. This is because they buy debt from several parties. However, they are not allowed to pool in this debt together. This means that they have to keep separate accounts for every lot of debt that they purchase. This is a regulatory requirement to protect the interests of investors who invest their money in ARC. However, it also helps the ARC determine how much profit they made on which lot. This allows them to make better decisions while purchasing debt in the future. Link between securitization and asset reconstruction. In India, the process of taking debt off the balance sheet is called asset reconstruction. However, in other countries, it is called securitization. In essence, both these words mean the same thing. However, in India, there are specialist companies that perform asset reconstruction. Thank you.